You got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up. Raise them up.
Okay, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. This is episode 342. It's the 27th of July, 11 a.m. GMT plus 8 here in Singapore. So yeah, this currency call, you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we'll be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so what is the big news item of the week? Yeah, the FOMC statement coming up this Thursday at 2 a.m. GMT plus 8. So yeah, I'm going to get Kim Hong here, currency analyst at LCMS Traders, to share more about his views about that. Kim Hong.
All right, thank you, Junwei. Yep, the US FOMC will be meeting this Thursday. Okay, yeah. So the thing is that what are we going to do? What can we actually look forward to, or what can we expect from the FOMC? All right. Now, before I dive into that, let me just do a quick recap of what they actually talk about, or what happened during the previous meeting. Okay, in June. So four major points. Okay. First of all, they revised economic projections optimistically, meaning they revised GDP to be upwards, they revised the unemployment rate to be downwards, and things like that. Okay. Second thing, the dot plot that was included in the projection materials, okay, showed that more members actually expect a rate hike, okay, earlier, okay, in 2022 and 2023. That means more members actually shifted their views on, a 2024 hike to 2023. All right, so that's the second point. The third point, Powell, okay, the Fed's chairman, Powell, actually said that that June's meeting was actually a talking about meeting. Now, this means that, the committee members actually spoke about QE tapering, okay? Details, we are not very sure about it, but they actually talk about, QE tapering, which is a good thing, all right? Which is what we want to know from the central bank, okay? Now, the last point being that the Fed continues to feel that recent spike in inflation is transitory, all right? This is something that we will want to pay attention to at least, for the next few meetings. All right, so that's the quick recap for previous meeting. Now, this Thursday, the meeting at 0200 GMT plus 8. Personally, I feel that it is unlikely we are going to hear from them, or rather, should I say, it is unlikely that the Fed will be providing details on when QE tapering will start. Okay, when QE tapering will start. Yes, they already started talking about QE, but to set down a date as to when they're going to start cutting back on quantitative easing, by how much, by how many billions, and so on and so forth. Such details will probably take a while. Okay, why is that the case? Okay, so basically it's too soon. Okay, it's too soon to decide on how much they want to taper and when they should start tapering, because like I mentioned just earlier, they just started talking about tapering in a June's meeting. So it is, very unlikely that during the next meeting, upcoming meeting in July, okay, they will just decide that, we're going to start tapering by how much, starting from when, okay? It's likely going to be the case that they want to wait for more economic data releases to have a clearer picture of the US economy, okay, on its recovery at the moment before, making such major decisions. Okay, this, as we all know, that the US central bank is their decision not only impacts the country, United States, but it also have an impact on the other major central banks. Okay, we are not the only one looking at what the US central bank is going to do. Okay, the other central banks are also keeping an eye on what they are doing as well. Okay, now, okay, so speaking about economic data releases, all right, The next meeting after this Thursday's meeting will be in September. Okay. That being said, we have a series of economic data to look forward to. All right. Shortly after the meeting on Thursday, okay, the US advanced GDP quarter and quarter data will be released for Q2. Okay. Now, just a quick talk about this whole US GDP thing. All right. So the US GDP data releases actually comes in three forms. Okay. First is the advanced release, which is the earliest release. Okay. Then I think the next one is called something like a preliminary. Yeah, I think it's a preliminary release of a GDP, which is the second release, and the final GDP. Okay, which is the after the whole quarter is done for like, I don't know, 2 months or so, then data collection has been completed, and after tallying all the data and things like that, they come up with a final value. So the advanced GDP being the the earliest release will actually have the highest impact on the US dollar. Okay, so unfortunately, okay, the data will only be released after the Fed's meeting. Okay, so yeah, the Fed will pay a lot of attention to this advanced GDP release for Q2. Okay, so that is one of the data. From now, okay, from Thursday until the September's meeting, we will be expecting 2 more, okay, NFP data, NFP jobs report, okay, and 2 more inflation data releases, okay, from the Bureau of Labor Statistics. Okay, now speaking about these jobs report and inflation, okay, bear in mind that the Federal Reserve, okay, they actually have a dual mandate, meaning that long story short, all right, meaning that how they actually go about tweaking their monetary policy, okay, is actually strictly based on how the US jobs market and the inflation data turns out to be in the US. Okay, the dual mandate being they are always aiming for maximum employment. Okay, that tallies to the employment data. Okay, second mandate being the price stability. Okay, which means price cannot be too high, like what we have been seeing for the past few months. High inflation. If it's too high, they want to cap it low. If it's too low, they want to bring it up and things like that. So they, we have to adjust monetary policy from time to time to actually achieve these 2 goals: maximum employment and price stability. Okay. Now, as we have seen recently that inflation has been rising very, very high. Okay, it's been spike in inflation. So nonetheless, okay, with the most recent release of the inflation, I think it was in early this month, okay, for June. I think there was a, let me just take a look at this. Okay, so the most recent inflation data, okay, it was actually the largest monthly rise, okay, since June 2008. Now, back then, when during the release, I was telling you guys that we had to pay attention to the Fed on whether they still feel that the recent rise in inflation, this spike in inflation, is still going to be transitory, or it's something that the Fed may want to pay attention to. Okay, so during the testimony, Paul's testimony in front of the House of Representatives and the Senate, okay, he actually continued to say that it's transitory and things like that. So this time around, okay, on Thursday's meeting, although it is unlikely that the central bank will be providing details on how much and when quantitative easing will take place, we still have to pay attention to their views, the central bank as a whole, okay, their view on this whole spike in inflation, especially when inflation is like going higher and higher from month to month. All right, so that's one thing. Now, second thing, employment. The most recent release of the jobs report, okay, indicates that 850,000 jobs were added in June, okay, which is a very good number, I would say. All right. Nonetheless, okay, the US is still 6.3 million jobs away from the pre-pandemic level. Okay, this has been highlighted by Powell, okay, several times already, okay, saying that yes, we are seeing good rebound in the employment in the jobs market, but we are still quite a distance away from the full recovery. All right. So we will still want to pay attention to what the Fed has to share on this whole jobs report thing. Okay. So with these 2 points, I would like to add another point on what to take note on for this Thursday's meeting. Okay. Basically, I guess most of you have already expect it's the escalation of the COVID Delta variant. Okay, so there's been a rebound in COVID cases in June. Okay, as in many other countries as well due to the Delta variant. So this actually gives a very uncertain outlook to the US economy. So anything that's uncertain will definitely affect the Fed, okay, which is why it is unlikely that they will want to settle down, okay, on a date, a timing, okay, and an amount of quantitative easing that they will want to carry out, which is why, okay, they will want to wait for more economic data releases before deciding on these major issues that will impact the whole world, okay, not only just the United States, okay. Now, with that, yeah, we will likely just, see a little bit of changes in the rate statement, okay? And anything else, Paul will address us during the press conference at 02:30 GMT +8, okay? Okay, so it's a bit early to talk about this right now, but I'm just going to give you guys a little bit of insight, okay? The next meeting, which is on September, okay, September 23rd, there's going to be a economic projection materials release, which is their quarterly release, okay? So, which further, I would say, explains why the central bank is unlikely going to tie down, the whole quantitative easing details this time around, okay? 2 months down the road in September, they are definitely going to have, with the upcoming releases of jobs report and inflation data and things like that, okay, and the advanced GDP data as well, they're going to have a much clearer picture, and they will be able to, come up with a projection, okay, economic projections, and with that set of economic projection materials, they will be in a better position to actually, make decision, at least, hopefully, okay, on QE tapering and so on and so forth. All right. Okay, with that, let me just check if there's any question, because I think I talk a bit too much. Is current COVID situation in US will impact that? Yes, of course, definitely. Like I mentioned earlier, it will definitely affect. Why is that the case? Think of it this way. Okay, now suppose the Fed were to say that we are going to start QE tapering in maybe end of December, okay, or early January, in 2022 by, I don't know, 20 billion per month, okay? So right now, the Fed is actually doing a quantitative easing of $120 billion a month. Now, suppose they were to reduce it to 20 billion starting from next January, okay? And then, all of a sudden, okay, this whole Delta variant starts to implode, okay? And we have a super spike in cases, touch wood, all right? Super spike in cases in the US. Now, what they're going to do is that they are likely going to, revert their actions, which is not very good, okay, which is not a very good thing to do. You start implementing this whole QE cut, and then you start reverting your actions. This will actually cause some economic chaos, not only in the US, but also in the global economy, okay? Now, actually speaking of this, we are actually right now, okay, we are actually seeing something similar, okay, in Australia, all right? So as we know that during the recent RBA's, monetary policy meeting, they actually do a little bit of QE tapering, all right? They actually extended their QE tapering by a short duration, okay, of 2 months, okay, from September to November, and they actually cut down on their QE on a weekly basis, okay? And unfortunately, okay, the Delta variant, as you guys know, there's a recent spike in number of cases in Australia, and also with the whole, the protest, okay, the protest on COVID lockdowns, okay, in I think New South Wales, okay, has led to probably will be leading to a more cases coming up, okay. So you see, that's the issue that the Fed is trying to avoid. Carrying out a quantitative easing tapering, okay, only to have a spike in cases coming up, which may actually, revert, which may cause them to revert their whole, reverse the whole decision of QE tapering and things like that. So this is actually what the, Fed is trying to avoid. Now, yes, Australia being a major economy, Reserve Bank of Australia being a major central bank, that's true. But it definitely has less impact as compared to the US FOMC, okay, because it affects, well, the whole world, rather than just the US by itself, okay. Tell us more about how you are leading the trading competition. No, okay, this is a talk on currency cost, so we're not going to talk about other things. All right, there's going to be another session on that. Okay, now with that, I think I will update you guys anything on this whole FOMC thing, that how it turns out and things like that on Thursday. Okay, Thursday morning is going to be a big pack, but yeah, I'm just trying to, I'll just try to get all the details I can get my hands on, and update you guys again on Thursday morning. All right. With that, I'll hand it back to Junwei.
Hey, thanks a lot, Kim Hong. Very, very comprehensive breakdown to what to expect. So just a quick summary. So unlikely that the Fed will be providing details when QE will be tapering. QE tapering will start, and then pay attention to their views to the inflations and jobs and the escalation of COVID Delta variant in the US. Yeah, so and as I think Jin is talking about the trading competition. If you guys wonder what is this trading competition about, with a $2,000 cash prize for the winner to be won every month, right? Yeah, 2 p.m. one of the hosts here, a private message from the host here, we will fill you in into more details. Okay, so without further ado, I'll move on to the charts with the dollar index. I'm going to get Scott Andrews here from Forex Briefcase Australia. Scott.
All right, good morning, everyone, and happy Tuesday. And thanks, Kim Hong, as well, for your insights. Now, for people who are probably thinking, look, that was a lot of information, what we do share as well in the Traders Club, EcoFin, and the Facebook group is the summary of the call as well at about 6 p.m. GMT +8. So Kim Hong provides that as well. I share it around 2. So that will be provided as well, just to get the details in a nice summarized series of paragraphs, so you know exactly what to look out for. So good luck, Kim Hong, about writing that today, because yesterday was a little bit quieter as well. But I definitely read it and I share it around, and people do appreciate that as well. So look, guys, US dollar last night, and we were talking about the US home sales and what we were anticipating, but what we did see was a pullback. This is the 4-hour time frame. We did see a miss on that as well, and I want to discuss that. But just what I want to show firstly is the price action is very much showing some stability, and it didn't even reach the previous low of last week, which was 92.48. We saw a 92.51 test, and now we're hovering around 92.60. So frankly, it's probably more buying opportunities. The reason why I say that is, there's still, inflation is still a big issue. We're seeing, like was mentioned, the COVID situation. We have the Delta variant strain, which is causing issues with the services sector still, with people actually wanting to return to work. And it's just a very dynamic issue right now. So what I want to show firstly is, we'll go now to the news, and I'll just share that now. So just with Forex Trading Asia. So, we saw out of the US last night, what was telling was the new home sales month on month was negative 6.6%. See, the forecast was for 3.5%. But when we put this into, comparison to the previous, it wasn't really, it was a plunge, but it wasn't too terrible. And then the new home sales for June was 676,000, forecast was 800,000. So we're pretty much back to where we were, in April last year. But you've got to say that we saw such a heated market that this is, simply put, people are just, things are stabilizing. So in regards to the US dollar, you definitely just want to pay attention to the FOMC, but I do agree that it's not going to be particularly eventful, but it's not going to be something that's going to, push the US dollar, that much lower. So I'll just go back to the charts to finish up here. So in conclusion, you just want to see what happens tonight. We saw in regards to the equity markets, they are still very strong. We have earnings going on in the US as well. And, we're just seeing things ease off a little bit with concerns that, when we see markets in stocks pull back, that's going to help the US dollar a little bit. So we'll see how, Wednesday is seen. So we might see a pullback there. US dollar rises, and we might see the pound, euro, Aussie, everything is just trickling up a little bit. So right now it's just, if this can hold steady sideways, that's a good sign for a push higher in the US dollar for Wednesday night, Thursday morning.
All right, thanks for that, Scott. Okay, so today is Tuesday, and the currency in focus is the euro. And I'm going to get Jin here, Jin Dao Tai, founder of LCMS Traders, and LCMS Traders, and a multi-million-dollar trader trading an account with more than US $15 million on a daily basis. Yep, I'm going to get him to do the euro currency call. Jin.
All right, thanks for that, Jingwei, and still good morning to everyone. Tuesday, we will be looking at the euro dollar, and Kim Ho has gone through in detail the FOMC. We can see that it looks like we might have that movement, but it's not, we're more likely, together with the dollar index, might be looking at some consolidation, possibly. With the euro dollar, what else to pay attention to? Here, looking at the forextradingasia.com economic calendar. Today being Tuesday, you can see that there's no euro news to be released. And then on Wednesday, tomorrow, we do have one German number, but what commonly happens with most traders is that you end up looking through an economic calendar and there's so many different news, so many different things that could, or you believe could move prices, or so many different things to pay attention to that you get a bit lost and confused. So what I tend to do is I've filtered down what to pay attention to. So stuff like that, I wouldn't pay too much attention to for the euro dollar. Even on the Spanish CPI or German unemployment numbers, or even the German CPI numbers, I wouldn't pay too much attention to. For, this is to be released on Thursday afternoon. I wouldn't pay too much. I don't think it's going to move prices too much for the euro dollar, particularly because the Eurozone is made up of several different countries put together. So a country's CPI number is going to have an impact, but not huge, not a huge impact. What I will focus more on will be the on Friday, where we have the Eurozone CPI number to be released. Year on year was 1.9%, expected to go to a 2%. And then you look a bit at the Euro GDP numbers, looking whether it's going to recover from a minus 0.3% quarter on quarter and a minus 1.3% year on year. But with the target of inflationary numbers at possibly coming towards a 2%, I still don't think this is going to signal any big good news for the euro dollar, because we've seen the Eurozone go through a lot in terms of economic performance, in terms of the way the virus has impacted the overall economy across the Eurozone. So despite it hitting the 2%, hitting the ECB's target of 2 to 3%, I think that the ECB, the market is anticipating that they will hold on with their current approach. They're not going to do any changes yet. They're still going to wait to see, or let it continue at 2% and beyond before we see the ECB take any further actions. So with that, We have some euro unemployment numbers as well, looking to stay at a 7.9%. So you can see that we don't have a lot of euro news to be released. The only ones is on Friday, CPI and GDP. The focus still comes back to the US dollar with on Thursday morning, as Kim Hong was highlighting already, the FOMC rate decision, press conference and rate statement. And then also the US GDP numbers. Again, I said this yesterday already, GDP numbers for the US looking like it's going to go from a 6.4 to a 8.6% quarter on quarter. This looks like very good news for the US dollar. And also on Friday, we have some consumer sentiment numbers for the US looking to stay at the 80.8 level. So no big changes coming from the Eurozone, no big changes coming from the Euro data, and then possibly some very good GDP numbers coming from the US with an FOMC news to be released on Thursday morning. What this could translate to in terms of the charts on the Euro dollar H4 time frame, right now is sitting at the 1.18 level. Sitting at this 1.18 level, I'm anticipating that with possibly good US news and also no big changes coming from the Eurozone, we could actually see that resume downwards. At this point, I'll be super cautious because we've seen that if I move this line slightly lower, just to highlight this low point, we've seen that the euro dollar has struggled over the last 2 weeks. So last week it's hit several times at this 1.1760 level. 2 weeks ago, it came close to that point. 3 weeks ago, it came a little bit closer to that point, and it struggled to break past this level. If I went to the daily time frame here, just to check at this 1.1760 level, we've seen that in March this year, it's also hit this point, broke a little bit lower before tracking a lot higher. So what I anticipate to see here on the H4 time frame is if you were looking to trade this euro dollar, what you could be looking for is a very short-term trade, below 1.18. Below 1.18, you're possibly looking at 20 pip stop loss with a good 40 pip take profit level towards the 1.1760 level. This will be, you can see, is a 20 pip stop, 40 pip take profit, 1:2 risk reward ratio towards the downside, but very limited. You expect some volatility at this 1.1760 support level. I believe that in the longer term, we could see similar to in March, if it does break a bit lower, bounce back up. I think this will be a level that we're going to see a lot more reactions for the euro dollar, but at this point, possibly going to track a little bit lower before we see another rebound. So quite simply, that's the euro dollar on the H4 time frame, driven because of the ECB, not many changes from the eurozone, and also some strength coming for the US dollar on the GDP data. Following on from that, if we expect the euro dollar to drop, then we could see the euro pound drop as well. But to highlight here, just draw a line. The last 2 weeks ago, it came to this 8515 level, and has seen a lot of tails struggling to track lower from 8515. So at this point, it's only a 20 pip move. I wouldn't be looking to trade the euro pound lower because it's only a 20 pip move. I would say let it come down and then look for that bounce back up to trade, or to see what happens at this 8538, whether it's going to track lower or bounce back up from this point. So euro pound is at a decision level right now. No trades to take at this point. I think that we're likely to see it track higher, but you're going to have to wait for it to break several levels before we are going to be really confident to jump into any trades on the euro pound.
Okay, thanks for that, Jin. Yeah, so just a quick disclaimer here. Any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Okay, next up, I'm going to get Daniel here. Yeah, Daniel, so yesterday, I understand LCMS Traders Club had the Monday coaching session. Any trade ideas to share, or maybe share what went through the coaching session? Daniel.
Yes, Jimmy, thank you very much. So really, last week, last week we have sessions. This week, yesterday, Monday, we have a group coaching sessions that we talk about for slightly more than a 1 hour sessions yesterday. Actually, what we do in the group coaching sessions is we'll guide through the current market conditions and show you how to identify trades and hopefully make profits together based on the trade ideas that we analyze together with the members here. Okay, so when we form the trade ideas, we actually have, while determining the trade ideas, a lot of questions comes in. A lot of members clarify a lot of doing the forex market. What are the questions like? For example, they have ideas on cross pairs. So we look at the cross pairs currency. So it's really very interesting. So after that, when we look at the market, I would like to share maybe down here quite a number of trade ideas, but maybe share about few trade ideas that we've seen here. I'll share here in here as well. Okay, what we look at is the euro. What we look at the euro yen. I mean, it's really very nice. The euro yen is on a downtrend, and it's right at that point of time. It seems to be ready to be bouncing off the resistance zone, coming in. And as Jin has really mentioned, euro is not really doing too well in that market. So when we look at this, it's possible that it could be trading downwards, and we were looking at bouncing off the resistance, and if it comes maybe at 129.8 level, we probably be looking to look for the sell trade all the way down towards the previous low of about 128.9. So this is something that we have discussed, and a lot we look at one of the currency pairs, and perhaps another one, pound yen. We will look at really nice downtrend coming in. We look at the market, pound, UK, it is opening up, but they are still impacted by the UK Delta COVID-19. So we look at it, perhaps if it does bounce off really surrounding around this zone of this downtrend, upper trend line here, we could be looking down for a quick trade coming in towards the next support zone of 151.37, and something to do this. And one of we will trade very strongly here was the CAD yen. And when the CAD yen, we look at this trade here, really very nice bouncing. So it's bouncing off the resistance as well, but it's very, very closely related to the oil. We also have one more correlation is that if the oil prices continue to drop, then we'll probably be seeing a CAD yen coming down as well. But this is a pretty long term with the correlation with oil setup. So we discuss a lot of stuff, forex related stuff with the correlation, or the chart patterns, or the economic data to prepare for the whole week. So this is something really very nice that what we do yesterday night. Okay, so you must be thinking, how do we join the group here? Really all you got to do is go to tradersclub.lcms.com.sg. This club membership and access to the platform of this EcoFin here. We have also the customized EcoFin platform. It is your chance to join only for $49 a month. Okay, it's only for $49 a month. It's not only we have group coaching sessions, we also have live trading sessions. We trade together. We see what the market together on Wednesdays evening 9 p.m. GMT +8. And not only that, we also have signals and signal analysis and market analysis and market trade ideas as we see in the market. Many forex related that will benefit you greatly. Now, this is without a doubt the least you could do to make sure that you achieve your best in your trading. Now, this is $49 a month. Price can change anytime, so make sure you get aboard. Sign up here right now and click submit, and I'll see you in the club. Cheers.
Okay, thank you, Daniel. Yep, so if you enjoyed this session and you want more support, more coaching, you want more analysis every day, yeah, Traders Club is the place to be. Okay, and we have come to the end of the session. We'll see you guys tomorrow for the pound currency call. Thank you so much and goodbye.